the expectation here is if we're going to have a stronger economic growth cycle, we should be seeing a pickup in oil prices, right? More demand for energy, stronger economic growth. That's the hope. So far, we haven't seen that at all. Money flows continue to be very negative in oil prices. Oil prices really haven't gone much of anywhere at this point, which is interesting because when you take a look at energy stocks, which typically should trade as a very close proxy to oil prices, they've actually been doing much better. So you have a divergence between a sector of the market versus its commodity, which is unusual. Let's get a little bit of what you need to know before the bell this morning. Markets, like I said, continue to trade up and running along moving averages. So if you take a look at really short-term kind of trading moving averages to look for short-term support, this is the 14, the 21, the 35-day moving average. So they're all very much clustered very close together. And that's because this market's just been in this consistent kind of trend higher. Pullbacks to the 35-day moving average have been consistently bought. That's where you continue to find buyers stepping in. The one thing that really kind of notes this morning, and we've talked about this before, is extensions in markets tend to get reversed at some point. The last time that we were kind of this overbought and the market was near this little short-term little blip we had a couple of down days that took us back to the 35-day moving average. Is about a 3% clip in the market. Nothing major, but that also corresponded with a drop-off in money flows in the markets, even as the markets were rising. So you had this negative divergence of declining money flows while the market was rising and the market was very overbought at the same time. Now, interestingly enough, we have exactly that kind of same setup right now, which is a very overbought market, markets continuing to rise, and we have a negative divergence in money flows. So it just suggests that the buying in the market is beginning to weaken a bit. Sellers are starting to show up here. Hasn't been reflected in the price yet, but that's not uncommon. But again, we typically kind of see that negative divergence in the markets when money flows into the market, in particular, when markets are overbought. Markets are getting very overbought here. Professional investors kind of scaling back just a little bit, taking profits. Typically takes a little bit of time to work itself in. But right now, if we get a correction back to the 35-day moving average, that'd be about 65.20. On the index. So again, it's not a huge correction, but it's about 150 points basically from where we are, back to those levels. So again, it's just been a very, very big rise here. So again, you kind of get a pullback to some level of support. There's a very good potential that if you get a bigger correction, it takes you back to the 100-day moving average, which is 61.80. So there's some support immediately below where the markets are now. There's also the 50-day moving average sitting around 50-ish. So again, there's, 6,500-ish. So there's multiple layers of support. So even if you get a pullback here, it's likely not going to be deep, kind of getting set up for that year-end rally. Again, we're about to kick off earnings season. That's something we'll talk about here this morning as well. President Trump has announced that, he's kind of pushing, and the SEC is actually starting to take advice on this about reducing the reporting requirements from being quarterly to semi-annually. But again, nothing wrong with the markets here. But again, just understanding that markets are very extended, very overbought. We're starting to see a bit of correction here. And this is across multiple asset classes. This isn't just the S&P that looks like this. We're seeing this in multiple areas because this momentum chase has been kind of running across markets. NASDAQ looks very similar to this, very overbought, starting to see some weakness in money flows. Equal weight is not the same. Equal weight has not gone much of anywhere here, but you are definitely seeing the decline in money flows in the equal weight index. Breadth of the market has been very tentative at best. We saw that yesterday in particular. The only reason markets were up yesterday is because of three stocks primarily. The rest of the market was not doing much, but you are starting to see more declining money flows even in the equal weighted index. Stepping back, looking at the dollars continues to kind of just base here, long-term base here. That's not really helping or hindering things right now, but that is supportive for assets that are dollar sensitive. So, one of the things that we've talked about before is looking at light crude oil because, again, the expectation here is if we're going to have a stronger economic growth cycle, we should be seeing a pickup in oil prices, right? More demand for energy, stronger economic growth. That's the hope. So far, we haven't seen that at all. Money flows continue to be very negative in oil prices. Oil prices really haven't gone much of anywhere at this point, which is interesting because when you take a look at energy stocks, which typically should trade as a very close proxy to oil oil prices, they've actually been doing much better. So you have a divergence between a sector of the market versus its commodity, which is unusual because oil prices are where the profits for these companies come from. So there's a pretty big gap there, which suggests that either oil prices have to catch up with energy stocks or energy stocks are going to have to catch down with oil prices. We'll see what happens. But economic growth is going to be kind of the key here as we start to look forward. That's what you need to know before the bell this morning.